The markets have once again opened with major losses this morning. There it is. Let's bring in CNBC senior markets correspondent Dom Chu. Dom, what are you watching here?
All right, so Mika, Joe, Jonathan, as we're watching another 1,300-point drop as we see things in the Dow developing right now, it's kind of important to put some of the context around it. In the 2 days since really the tariff announcements have come out and we've seen that 2-day market reaction for Thursday and Friday, data from S&P Dow Jones Indices now shows that 2-day drop in market value at just around nearly $6 trillion from the U.S. market wiped out. If you look at it from the record highs that we saw back on February 19th, that same data shows a nearly $11 trillion drop in the value of the stock market here in America since those record highs. Now, as you talk about what's happening today, we're seeing the follow through from what happened over the last couple of days, but a lot of it is due to this idea that there is still this notion people don't understand what the real effects of these tariff policies will be on not just the U.S. economy, but the global economy overall.
We have been treated so badly by other countries because we had stupid leadership that allowed this to happen. They took our businesses, they took our money, they took our jobs, they moved it to Mexico, they moved it to Canada, they moved a lot of it to China, and it's not sustainable. We're not going to do it. Now we have hundreds of billions of dollars is pouring into our country. On a monthly basis, it's pouring, it's already started because they put tariffs on. And eventually it's going to straighten out and our country will be solid and strong again.
We have major breaking news right now. The United States stock market is in free fall already. The Dow Jones opened about 1,300 points lower. The S&P 500 opened about 3.2% lower, and the NASDAQ opened about 3.9% lower. This is just the beginning of what could be a stock market crash today, one of the worst days for the stock market in recent American history. Stocks are plunging. I mean, it is bad, folks. It is not, and there's no sign of it getting better because the Trump administration has repeatedly said that it will not be reversing its tariffs policy at all. And overnight, global markets crashed as well across the board, from Hong Kong to China to Taiwan to France, the United Kingdom, and elsewhere. Global markets across the world have plummeted because of the tariffs and what they are going to do to financial markets across the world, not just in the United States. I'm going to do a full breakdown on my Substack shortly, so be sure to subscribe for free at the link in my bio and follow along to stay up to date on all the news you need to know about. There'll be much more to come, I'm sure, very soon.
Now that corporations have had time to digest the new tariffs, it's becoming clear they're never going to build new factories in the United States. The new tariffs that hit Vietnam are 46%. And that's where Nike builds half of its shoes. And the stock is down, 15% in one day. So Peter Schiff says Nike isn't going to bring production back to the United States. Building factories here would cost more than the 40% tariff. Instead, Nike will raise prices and shift focus to other countries where people can still afford their products. This isn't just going to be Nike. Most global corporations will just follow the money, and that money is beginning to leave the United States in a hurry, because it will make more sense for these corporations to sell their products in markets that will be absorbing the wealth that is leaving the United States because of the new administration's tariffs. Everything in the United States will become harder to find and more expensive. From a new car, to produce at the grocery store, to the Nikes on your feet. This is a shift away from how America has done business for the last 80 years. People are talking about short-term pain. I don't know how pain is short-term when nothing is coming back.
So good evening, everyone. Imagine waking up tomorrow to news headline screaming market plunge to 5 trillion US dollars overnight. Your savings, your retirement account, your investment wiped up in hours. Sounds like a nightmare, right? Well, in 2025, the nightmare might just become reality. Tonight, we are diving into the 2025 stock market crash. A warning from the worst of the worst. We look at why some experts are sounding the alarm. What history tells us about worst crashes and what you can do to brace yourselves. So let's get started. So the current storm, April 2025, here we are in April 7, today actually. The US stock market is already reeling. Just last week on April 2nd, President Trump declared the Liberation Day, unveiling sweeping tariffs that shock global markets to their core. The Dow dropped over 4,000 points in 2 days, 9.5% of its value. The SP and 500 shed 10%, and the Nasdaq, heavy with the tech giants, lost 11%, slipping into bear market territory. That is the $5 trillion in market value gone just in 5 hours and 48 hours. The worst 2-day drop in SP history. Oil prices down 7%, volatility skyrocketing. This chaos out there, and it's only the beginning. Why is this happening? Tariffs. Trump's promise of economic protections turned into sledgehammer. 25% levies on Canada and Mexico. Threats of more against China, who's fired back with that 4% retaliatory tariffs. Businesses are panicking, consumers are bracing for higher prices, and investors are running for the exit. This isn't just a correction anymore. It's a warning shot. So let's step down and look the worst crashes in history. So the ghost that haunted today, or that haunts today markets, First, in 1929, the Great Depression kicked off with a 23% drop in 2 days. Over years, the market lost 89% of its value. Why? Overhauled stocks, margin, debts, and banking collapse. Then, in 1987, Black Monday, a 20% single day plunge, driven by panic, selling, and new computerized trading gone haywire. And in 2008, the financial crisis saw the S&P lose 57% back to through, fueled by housing bubble and reckless leverage. So what does this have in common with a 2025? High valuation. Check before this crash started, the S&P Shiller P/E ratio was hovering near 38, a level seen only during the dot-com bubble and early 2022. Policy shooks, check. Tariff today echo the smooth Haley Act of 1930, which deepened the depression and panic, check. The VIX Wall Street fear gauge is climbing fast, hitting the levels not seen since the COVID crash of 2020. History doesn't repeat, but sure rhymes. What about the prophet of doom and expert warnings? Now let's hear from doomsayers. Economist Harry Dent back in 2024 called this the bubble of bubbles, predicting an 86% S&P crash in 2025. Jeremy Grantham, a veteran investor, warned of the cataclysmic decline up to 50%, driven by overvaluation and global instability. Even Robert Kiyosaki of Rich Daddy Poor Dad fame paged February 2025 as the start of meltdown. Were they early, or were just late to the party? So not everyone agrees. Morgan Stanley still see the S&P hitting 6,500 by year end, a 15% rebound from today's battered level. Goldman surge despite trimming forecast. Experts a softer landing. But their kicker, even the optimists are nervous. BlackRock's Larry Fink recently said clients are more anxious about the economy than any time in recent memory. When the bulls start sweating, you know something's up. So there have been warning signs why this could get worse. So what's just fueling this fire? First, tariffs aren't just US problems, They are global. China retaliation, Canada lumber threat, Mexico auto export, all these dominoes are falling, risking a trade war that could choke the world growth. Second, inflation back with a vengeance, consumer expert of 4.3% price hike. So consumers expect a 4.3% price hike in the next year, up from 3.3% last month, thanks to tariffs trickling down. The Fed, they are stuck, can't cut rates with inflation rising, can't raise them with economy teetering. Then there's a luxury signal. LVMH, the king of high-end goods, is down 20% this year. When the rich stop splurging, it's a canary in the coal mine for a recession. And finally, the market itself, the tech giants like Nvidia, once unstoppable, are cracking under the weight of tariff chaos and AI spending doubts. This isn't a dip to buy, it's a cliff to avoid. So what's the worst case scenario and what could happen? So picture this, the S&P doesn't stop at 10%. It falls to around 35% and 50%, maybe more since the pandemic darkest day. The Fed slashes rates in a panic, restarts quantitative easing, but it's not late. Recession hits, business slash jobs, consumer hoard cash, and global trade grinds to a halt. It's not just crash, it's depression echoing. Like in 1929, but with a 2025 unique twist, politically driven and reveling. So Trump says a market will boom, but his own treasury admits no recession is priced yet. Denial at the top could make this worse. If the Feds don't act or acts too slowly, we are looking at a storm that could last years, even not months, So what's the step? First, I think, let's say, don't panic, sell your things, like they say, $1 invested in 1971, it's worth over 30,000 US dollars today, So second, diversify stock, in bonds, cash, even gold. Spread your bets. Third, watch the signals. A GDP drop, rising unemployment, or a yield curve inversion. These are your red flags. And finally, talk to financial advisors. This isn't the time to go it alone. If you are a long-term investor, this could be a buying opportunity. Eventually, Warren Buffett isn't predicting a crash, but is sitting on a cash pile, ready to pounce when there's a valuation drop. Preparation beats prediction every time. And a closing call, a call of action. So here is the warning from the worst of the worst, 2025. 2025 could be a defining moment for your wealth. We are not fortune tellers, of course, but the sign, tariffs, inflation, history are screaming cautions, Will it be crash, a correction, or a miracle recovery, So no one's know for sure, but what you do next, how you prepare, could mean the difference between surviving and sinking.